we've got some core concepts, and we call them the big 3 needs to learn. So to be a good accountant, you need 3 core things on your radar, okay? The first one is what we call the dual effect. The dual effect is where every transaction has 2 effects. And I'm actually going to just update this and say at least 2 effects. And we're going to go through a couple of examples today, okay, just to get your head into it, but we're going to go through loads over the next session. You buy goods from a wholesaler for cash. What 2 effects are there? So what's happening here? You tell me, guys, if you can do it privately. So if you can just tap my name where it says 2, because some of you, Clarissa and Jess, you just type so quickly I can't get over it. Type in what you think the 2 effects are. Have a think about it. It's not easy. Have a think. Just going to give you 2 minutes. We're going to really go back to the absolute fundamental principles. Some of you are mentioning debits and credits. We will get onto that, but at the moment we're trying to understand the impact. We are buying goods, okay? We're buying goods from a wholesaler. So buying goods from a wholesaler for a shop means you are buying stock. Don't know what it is, could be cans of food, anything. So on one hand, we have no stock. We have now got our inventory or stock. So when you see buying goods, that means that you're buying stock. But that is only one effect. The other effect is the cash. The cash has gone down because we've taken it out of the bank, let's say, or out of petty cash to pay for the inventory. Now, is inventory an asset or a liability? Brilliant, brilliant. It is an asset. We own it and we will get cash for that when we sell it. What about cash? Is that an asset or liability? What's cash? Yeah, absolutely. So it can depend. We would always assume that cash is an asset. So if we just put like a little cheeky note here. Always assume cash is an asset unless you are, it states otherwise. Yep, unless stated otherwise. Brilliant. So on one hand, we've got an asset increasing, haven't we? But on the other hand, we've got another asset reducing because we're taking that cash and actually changing that asset into inventory. And a good accountant really understands the effects. And this is just really giving us the opportunity to think about it. Is everyone okay with that? Next one. Can you have a go at this one? And can you type it in privately? I'm just thinking, yeah, all of your logic here is excellent, guys. So I'm very, very happy. You buy goods from another wholesaler. So this bit is exactly the same. We buy goods So it's about learning the terminology. We buy goods from another wholesaler. So we are increasing our inventory. We are increasing our inventory or stock. It means the same thing. So that asset is going up. And it says, who says he will send you a bill later. So nothing's happening to cash. I'm not paying it now. I'm paying it later. I owe money. So it's a liability. And well done for those guys who said we are increasing our creditor or trade payables. So don't worry, you will get used to it. Just got to remember the definitions, haven't we? But are we happy that here we are going to pay later? So if I owe somebody, we call that a payable or a creditor. So well done, guys, who got that right. That's pretty awesome. And don't worry if you didn't. You were nearly there. You knew that cash wasn't moving. It was just what's the other impact. Let's keep going. It's just practice. We're going to get loads of practice. And I think in the real world, you don't actually get a chance to think about it. You're just doing what you're told. So this is a really great opportunity to think things through. Can you have a go at C for me? Let's have a look at this one. You sell, brilliant. You sell goods in your shop for cash. So we have got our stock or inventory, going down. Brilliant. Excellent. It's going down. We've also got for cash. So we sell goods, so that means our inventory is being sold. And we've sold this for cash, so it means we're going to receive some cash. So we've got an increase in cash. Now, there's other things going on here. When you are in business and you buy and sell, what do you want to make? Sorry. So if you're in business and you buy cans of food and then you sell them on, what do you want to make? Lovely, good. Yeah, we want to make profits. Okay, excellent, brilliant. Let me just put some numbers on this, guys, okay? Let's say we've purchased the stock. Let's say it was £2,000. So I'm just making this up. And we sold it for 3,000. That means we've got a profit of £1,000. So when we're looking at our dual effect, my stock has gone down by how much, guys? How much has my stock gone down? These are my numbers. I've made them up. Just. Yeah, it's 2,000. So my purchase of stock was 2,000. The cash that I've received is 3,000. So I have actually got another effect, which is profits of 1,000. Because what you've got to appreciate is, in my inventory, I would have purchased 2,000, another purchase, let's say 2,000, and then I've sold them, but I'm taking them out. So I'm taking the cost out, so I've got 2,000 left. So that is my cost there. Does that make sense, guys? Yasmin, is that all right? So here, I actually think there's 3 effects. And that's why when I look at this, I like to put in at least 2 effects, because occasionally there are more. And it is just with practice that it gets easier, I promise. Are there any questions on that one? Because it is a little bit tricky. We're looking good. You sell goods. So here we've got sale. When we make a sale, what do we want? No one mentioned it in their answer. When we make a sale, what are we looking for? Yeah, cheeky little profit, aren't we? So again, I'm just going to make some numbers up. So let's say it's like 5,000. The cost is 4,000. And we've got a profit of 1,000. Just, hypothetical. I've made those numbers up. Yeah, absolutely right. We've got our inventory or stock going down. By how much? If I'm doing these numbers, how much is my inventory going down by? Lovely. Great. Yep. Well, we'll get the hang of putting our answers in the private chat by the end of it. You've done amazing for your first session, guys. It is 4,000, so that's your cost. Is everyone okay with that? Those didn't answer. So you're taking out of inventory the cost elements. Good. We've allowed them to pay at the end of the month. So they owe us, okay? E owes me. So this is your debtors. So we're going to increase debtors. What's another word for debtors? Did anyone put it down? Let me have a look. Yes, you did. Trade receivables. It is hard, guys, but we do need to try and learn all of the terminology. Even from an examinability point of view, they do use them all. And then we've got a cheeky profit. And that's an asset. See, now what's a debtor or receivables? What category would you put that in? Is it an asset or liability? Brilliant. Yeah, it's an asset. It's an asset now. It's not a future asset, it's an asset now, because if you've sold something, you've got a legal obligation in contract. That customer owes you that money. It is written somewhere. So, yeah, definitely. It's not a liability. We don't owe them the money. They owe us the money. So they owe us the money. He owes me. So our customer owes us the money. We will get the cash in at some point. Now, this is really important. And the reason it's really important is because it's the underlying principle to double entry bookkeeping. Now, the exciting thing is some of you are already doing debits, credits, debits, credits. But for others, you've no idea what's about to happen to you. You'll be loving it. But I want to put down at this point in time a summary of the core categories, okay? Something is either going to be an expense, assets, or drawing. And they are either, you are either going to say to yourself, I'm increasing or decreasing. So, for example, stationery. You'll get to know that I absolutely love stationery. So I buy stationery for cash. So what is the dual effect? Well, stationery's gone up because it's an expense, but my cash has gone down. However, what's the impact on my profit and loss? If I buy more expenses, what's going to happen to my profit and loss? Yeah, my profit decreases. Well done, guys. So expenses, an increase in expense has an overall impact that the profit goes down. So if I just give you a little cheeky example here, we buy stationery for 100 quid cash. I'm going to increase my expense, which is reducing my profit. I can't put it as an asset or liability because that's not what it is, okay? Increase an expense by 100 quid, and I'm decreasing cash, which is decreasing an asset by 100 quid. That's the dual effect. Everybody okay with that? You've then got, we've seen assets, we're quite happy with assets. We've seen drawings in regards to the owner taking money out for their own use. You've then got other categories, liability, we've seen that, income, and then capital. And again, if we've got an increase in income, that is going to have an impact, because that's your sales, that is going to have an impact on the profit. Because expenses and income go on the P&L, but liabilities, assets, drawings, and capital all go on the balance sheet. Absolutely. That's the dual effect. So one of our 3 key things, tick and done.